Hello everyone. You might hear Repo Rate hiked, Fiscal Deficit at 4.3% of GDP. Sensex crashed 800 points. Have you ever watched the news and felt like everyone else understands this except you? But by the end of this video, you will understand 14 finance terms that show up in the news constantly. I'll explain this simply with real examples and what had actually happened with each of them right now and what's actually happening with each of them right now. Without any confusion, let's get into it. As you know, I'm a chartered accountant. On this channel, I simplify tax, finance and economics concepts so you never feel lost again. If this helps you, please subscribe to my channel because I post videos like this every week. Let's start with the term which you hear almost every single week. These are the 14 terms we are going to cover today. 14 terms we are going to cover today. Yes. The first thing is the repo rate. Repo rate is nothing but, for example, if you own a toy shop and if you own a toy shop, now all your customers they buy goods from you on credit. You need cash immediately to purchase fresh stock. Means you are in need of 1 lakh cash urgently. So you go to your elder brother. This is an example to just make you understand the concept easily. So you own a toy shop, you need 1 lakh cash urgently, you go to your elder brother, he lends it, but you must return 1,01,000 next month end. That extra 1,000 is nothing but the interest is charged. So in the same way, banks also sometimes need short-term cash. Just like you might need a quick loan, banks also need some short-term cash. They borrow that cash from RBI. Your elder brother is like the RBI and you are bank. Okay. The interest charged is the repo rate. Interest rate charged is repo rate. So banks borrow that cash from RBI. Okay. The interest rate that RBI charges from these banks for this loan is known as repo rate. It's very simple. Okay. But why does this repo rate matters to a common people, to a common man or to the public? Means suppose if RBI increases the repo rate from for example from 5% to 6%, what actually happens? Now banks have means it has increased interest from 5% to 6%. If it's taken 1 lakh loan, 5% interest means it would be per annum 5,000. For example, if it has increased to 6,000, means it's a cost to the bank, right? Means bank is taking loan from RBI. When the interest rate increases, bank has to pay more interest to RBI, right? Means bank have to pay more interest when they are borrowing. Will banks happily bear this loss, bear this cost? No, they'll pass it to their customers. So this is the reason why your EMIs increase. Okay, car loan EMI, home loan EMI or any business loans EMI interest increases. Okay, if contrast, if RBI decreases the repo rate, means bank can get loan at cheaper interest rate, means they'll get a cheaper loan, so they will pass that benefit to the customers who are taking the loans. So we can take loans at lower interest, so we can take more loans, we can make more spending, we can produce more goods, thereby more growth. Okay, so when the repo rate goes up, banks borrowing becomes expensive, so they pass that cost to you through higher home loan and car loan EMIs. When it goes down, repo rate goes down, your EMIs usually become cheaper. As of now, RBI held repo rate steadily at 5.25% in 2026 as of June. This is the same as in 2025. It's a neutral stance while balancing the inflation risk and growth concerns. Right? All you are clear about repo rate? It's nothing but the rate at which cash is lent by RBI to banks. If this rate increases, then it becomes more expensive. Our EMI's interest will increase. If it is reduced, it's a benefit to the bank at cheaper interest rate, so the benefit will be passed to the customers, so we'll get loans at cheaper interest rate. That's all. And the next thing is inflation. You might have about this every time. but here is the simplest version. For example, you go to your grandmother. A person has went to their grandmother and asked what's the tea cost during their time. She said that it's 50 paisa once, but now it's around 15 to 20 rupees. Did the tea change? No, tea didn't change. Earlier with 50 paisa you could get a tea. Now with 50 paisa you couldn't get tea. Means the value of money has fell down. Okay, inflation quietly steals your money buying power. Buying power of money is reduced during inflation. Okay, for example, very easiest example is in 2025 idli plate cost 20 rupees. In 2026 same idli plate cost 24 rupees. Same idli, there is no difference in that between the years, but only the price has changed. That if this 4 rupees increase in cost is nothing, but with the same 20 rupees you cannot buy idli this year. So that means money has lost its value, means money buys less. This is known as, so 4 divided by 20 you will get 20% inflation rate. And why does inflation matter to normal public? Means, for example, if your salary is 50,000 per month this year and next year also it's 50,000 per month. Okay, I'll able to write once. If your salary this year means 2025, last year is 2025, 50,000 per month. 2026 also it's 50,000 per month. Means nothing has changed. No, it's wrong. It has changed. What has happened is prices, if inflation is 10%, prices has increased by 10%. But your salary has not increased. It remained the same. So your same salary buys less. Understand? That is why salary growth should ideally be greater than inflation. Salary growth rate should be more than by inflation, so that you can end up with better off. Yes, for example, as of May 2026, the inflation rate was 3.9%. Yes, but what does this actually mean? What does mean by inflation is 3.9%? Means, for example, if you imagine 1 year ago, your family's monthly expenses are 10,000 rupees per month. Your family expenses per month 10,000 rupees. Now the inflation rate has gone 3.9%, right? Yes, that means this year to buy the same groceries, vegetables, milk, transport, electricity, mobile bills, etc., whatever are included in this 10,000 expenses, for all this to buy in this year, you need to have an income of 10,000. You need to spend 10,400 per month. This 400 extra what you are paying, you need to pay more just because of inflation. That is what inflation means. Another way to think about this is, last year 100 rupees, with 100 rupees you could buy some goods and services, but today, this year, for this to buy the same good or same service, you have to spend 104 rupees to buy the same things. So inflation is not just prices going up, it's your money becoming slightly less powerful over time. For example, if your salary increases by 10%, while the inflation is just 4%, your salary growth is higher, right? So it's good, better off. But if your salary is only 2% has increased, whereas the inflation is 4% that year, then it's wrong. You're actually losing purchasing power. Even though your salary went up by 2%, it's not enough to cover that year's inflation rate. That's why our RBI closely monitors inflation. At present it's 3.9%. It's at moderate and comfortable stage, because RBI aims for inflation around 4. with a tolerance band of 2 to 6%. So 4 plus or minus 2%. So 3.93% is almost exactly within the RBI's tolerance limit. This year inflation rise recently because according to the recent data, food prices had increased. 1 minute. Food prices had increased. Fuel and transport also increased. Crude oil has increased globally. So due to all these things, there was a recent inflation rise. Yes, hope you all had understood what is meant by inflation. And CPI means Consumer Price Index. It's simply an official number that is used to measure this inflation. Means we'll take a basket of goods and services. Basket of goods and services. So what's the price difference of the same basket in this year and next year? Like that. So we could get the inflation calculation. The next most important thing is gross domestic product. It's nothing but the GDP. We call GDP is like a country's report card for the entire country. Yes, imagine a family having total income of around 9 lakh rupees. A family income, let it be 9 lakh per annum. It's only for a family. If you could take for entire economy, you have to take all the farmers, to take all the factories, manufacturing, production, all doctor services, engineering services, all CA services, etc., teachers, lawyers, etc., all these services and goods if you could take at a time, then it accounts for the economy as a whole, everything produced. So gross domestic product is nothing but total value of all goods plus services produced in a country in an year. Means it should be produced in country. For India's GDP, it should be produced within India, no matter who had produced them. Resident may produce a farmer, non-resident like any Japanese company, car company or something else had produced cars in this country within this year. It's also amounts to GDP because it is produced in India. As simple, what is the value of all goods and services produced in a country in a year is the total, it's the gross domestic product. For example, if suppose India's GDP grows from 100 lakh crore to 107 lakh crore, then the growth is 7%. Okay, this usually means more jobs, more business activity, more production, more business activity, and ending up with more income. Growing GDP is like a child growing taller and stronger. As of June 2026, India's economy is expected to grow by 6.6%. Yes, 6.6%. Think of it like a country's report card showing how much bigger the economy has become compared to last year. GDP growth doesn't mean that every individual becomes richer. It simply means that the overall size of the economy, that means the overall production of goods and services has increased. Due to businesses usually get more customers, companies expand, governments collect more taxes, and more jobs are generally created. This is what meant by GDP. Sometimes there would be some other concepts will be there, like jobless growth. We use it to study that there is a growth but has not created sufficient jobs. Such type we could call it as jobless growth. And the next thing is fiscal deficit. Some people found it confusing for everyone, but it's actually very simple. Very small example, household budget. A household is there, monthly income is 50,000, expenses are 60. So extra 10,000 you have to incur. What will you do? We'll borrow the 10,000 balance which is required, but it's not there, so we'll borrow them. Government also works on the same pace. Family, if taken as a once, it's a household. If taken together, it's government. So suppose the government earns 100 rupees and spends 120 rupees. 20 rupees is a deficit. So government borrows at 20 rupees. This 20 rupees is known as fiscal deficit. Whatever is a requirement of the government to borrow, that amount is nothing but fiscal deficit. Borrowing requirement for the government is known as fiscal deficit. But why should government borrow? Means borrowing is not always bad. Sometimes it's bad, sometimes it's good. If it is used for productive investment, it's good, like building highways, roads, or any infrastructure. It's good. For defense, yes, it's good. But sometimes just for buying goods or just for incurring expenses you are borrowing, means it's not good. Yes. So fiscal deficit means borrowing requirement of the government is known as fiscal deficit. It's nothing but the difference of earnings and the spendings. When the government spends more than it earns, this gap has to be covered through borrowing. This fiscal deficit is expressed as a percentage of GDP. So if the fiscal deficit is 4.3% of GDP, it means that government is borrowing every 4.3 rupee for every 100 rupee the country produces in a year. 4.3% of GDP. Currently, India's fiscal deficit is targeted at 4.3% of GDP. It's slightly lower than the revised estimate of 4.4% in 2025 to 26. In the current year, it's 4.3%. Hope you all understood this also. We'll go ahead with Sensex and Nifty. You'll hear these names daily, but what are they really means? Many people think Sensex and Nifty are companies. They are not companies. Think of them like they are thermometers or measures of stock market. Yes. Suppose you want to know, there is a school. There are 2,000 students. You would like to know what is the health of the 2,000 students. Health check means you don't check all 2,000 students, for example, but you'll check a few representative students itself, so that you could get a conclusion about the health of that school, right? So in the same way, it's for companies' performance. Means, for example, Sensex tracks 30 companies on Bombay Stock Exchange BSE and Nifty 50. It's like top 50 companies on National Stock Exchange. So, okay, when these top companies perform well, the index rises. When these perform poorly, the index falls. If, for example, 40 out of these 50 perform well, means rise today, then Nifty may increase by 300 points, for example. So news channels say markets are positive today. It doesn't mean every company is rising. It means that most major companies performed well. So the stock market NSE Nifty ends in profits. It says like that. So simply saying Sensex is a report card of top 30, Nifty is a report card of top 50 companies. They are simply indices, a basket of top companies on India's two main stock exchanges. The difference only, it tracks 30, it tracks 50. Yes. Next most important thing is non-performing asset. It comes out regularly in every banking news. Suppose, for example, if you lent your friend 10,000 rupees, okay, he promised you he will pay within 3 months. Or in a year, every 3 months he must pay interest. But 3 months had lapsed, 6 months lapsed, 12 months lapsed, nothing was paid from him. Then that loan has become a problem to you. The same way, banks also face the same issue, but with a massive scale, larger extent. For example, bank gives a loan of 10 lakh rupees, okay, on day 0, means today, okay. It expects both the principal repayment and also the interest. Both are expected. Bank doesn't give any loan at free of cost, right? So the repayment includes both the principal and the interest. We have to pay the principal, we have to pay the interest. Okay, na? Okay. Yes, we have to check the means loan has been taken. This is a due date for interest, EMI payment, due date. You didn't pay on the due date. 90 days lapsed from the due date. Still not paid anything. Means whatever is due is not paid on this day. Okay. So from 91st day onwards, it becomes a non-performing asset. Until here it's performing asset only. From here onwards it becomes a non-performing asset. Day 90 plus onwards it becomes a non-performing asset. So bank has to prepare for provisions. Means this debt may become substandard asset or else doubtful asset. Likewise, bank has to make a classification of these assets into non-performing assets. This is what NPA means. If there are more NPAs for a bank, it means bank suffers losses. Less money is available for new loans. So whatever loan the bank has given, most of them are not being recovered to it. So what happens? Less money will be available with the bank for new loans to others. Okay. Yes, NPA is sometimes dangerous because imagine 1000 customers stop repaying to the bank. The bank suffers losses. Less money is available for new loans. That is why banking news frequently discuss about these NPAs. Okay. Why this matters to you is more NPAs a bank has, the weaker is its financial health. So which can affect the deposit safety sometimes. Yes, India's banking sector, it has shown significant improvement. The gross NPA ratio of scheduled commercial banks improved. It's a good sign, right? 2.8%. It has declined to 2.8%. With banks loan loss provisioning recently hitting a 12-quarter low. It's a 12-quarter low. As asset quality continues to improve. Quality of assets are becoming improved because of the loan recovery processes done by banks. So the gross NPA ratio has improved as it got declined to 2.8% from a peak of 11.2, which is a very good sign. So this is what NPA means. The next thing is current account deficit. This is also simple. So imagine a household with an income of 50,000, expenses 60,000, so 10,000 is the gap. Means you are spending more than what you are earning. Spent is more than earning. Okay. India also, now if you consider India imports many goods like gold, crude oil. It imports gold, crude oil, as you know, some electronics, some machinery. It imports. These are all imports. Imports means India buys from foreign. India also exports. Means India sells to other countries. What does it sell? Some software services, medicines, the most important one, textiles, and also some other goods like engineering goods, etc. Suppose if the imports are more than exports, that is nothing but this deficit. Means country is buying more than selling more. So for this, so it has bought more from foreign countries than exporting more. If imports are more than exports, it means that buying more than selling more. So what happens is we have to pay to the foreign countries, usually through borrowings or any foreign investments will fund, the country will fund this gap. Small current account deficit is okay, it's normal, but a large current account deficit can pressure on the rupee value. It's okay. As a whole, you can consider the current account deficit as a country's import and export balance sheet. If India buys more from other countries than it sells to them, then that gap is nothing but the current account deficit, and also measured as a this is also measured as a percentage of GDP. It's in moderate stage, 0.8% of GDP. It has improved well. It's also a very good sign. It got improved this time. This improvement is strongly supported by service exports and remittance inflows. Through remittances, inflows into the country from foreign countries. Due to this, the current account deficit has improved a lot. Okay. Forex reserves. You know that RBI means, for example, a family or a household or a person like you keep fixed deposits, you keep some gold at your home, you keep some emergency cash. All of these are to be used during difficult times, right? Similarly, RBI also holds reserves. It holds forex reserves, means foreign exchange, like the dollars, euro, pounds, sometimes gold. RBI also holds these reserves. Means why does it hold? Means sometimes oil prices, whatever country of India imports, like oil prices had doubled, or foreign investors had pulled out their money from Indian businesses, or rupee weakens sharply, then India still needs to buy oil, right? So it needs dollars. Okay. So these forex reserves are nothing but they are like safety cushion. Means as you keep some emergency cash during difficult times, the same way for the whole country, RBI keeps a safety cushion. This is the foreign currency, forex, foreign exchange, like dollars, euros, dollars or pounds or any gold. These reserves help India for imports. And to also to stabilize the Indian rupee, stabilize the rupee INR. To stabilize INR also, RBI has to hold forex reserves. I'll come with another video about how the exchange ratio, means foreign exchange value, forex of India in comparison to dollars, how is it decided, how the market decides them, what is the role of RBI, what is the reason for decline of Indian rupee or improvement of Indian rupee. I'll come up with another video clearly. If you would like, or if you would interested in that, please comment me. I will make a separate video on the value of rupee, depreciation or appreciation. I'll make a video on that, sure. So in this way, these forex reserves help India to pay for imports to stabilize INR, and also reassure global investors that our country can handle financial stress. So for that, RBI holds some forex reserves with it. As of June 2026, RBI had a reserves of $681.6 billion. This is highest among the highest levels India has maintained. Okay. This is the concept of forex reserves. The next thing is two quick terms: disinvestment and subsidy. You might heard about subsidy well, but disinvestment means nothing but government selling part of its stake in a public company. You know that government owns many companies like SBI, ONGC, GAIL, etc. Sometimes government sells a part of this share. For example, recently in the General Insurance Corporation, India government has sold 5% share. This is what meant by disinvestment. The reasons could be to raise money, to bring more efficiency run, and also to reduce government burden. This is disinvestment. Subsidy means a part of cost. Means, for example, LPG cylinder, its actual cost is 1200 rupees, but public like you and me, we pay only 900 rupees, for example. example, pay only 900. This 300 rupees is paid by government. Means like government sharing your bill. Common types of subsidies like LPG in food, fertilizers to farmers, etc. These help the poor families, farmers and essential sectors. This is a financial support. It's a financial support the government gives to make something cheaper or more accessible for all citizens, or it may be to businesses also. Direct versus indirect tax, it's very simple. Direct tax means you pay directly to the government. You pay directly to the government is direct tax. Like income tax, you earn a salary of 10 lakh or a profit from your business or a profit from sale of a land or building or gold, etc., or any other income. You got 10 lakhs income. So you pay some income tax to the government, you will pay directly. Your neighbor doesn't pay, you only have to pay. Means the burden is also with you only. Burden is with you, payment is also by you only. Indirect tax is different. Indirect tax means when you buy some goods like calculator or a pen or a soap or shampoo or a mobile or anything else, a good or any other services, GST is built into the price. It's included. You will find right in MRP inclusive of all taxes. In that way, this GST or any other indirect taxes are included. You pay that tax amount to the shopkeeper, means seller. Seller will pay to the government. Here you are only paying, but it's paid by the seller to the government. Okay. You never directly interact with the government. You never directly interact. Okay. You to the government means direct. You seller and then government means indirect tax. Direct tax is paid directly by you. Indirect tax is paid indirectly by you. Okay. It's based on your income or profits. It's based on the product or good you have bought. You pay it indirectly, built into the price of what you buy. The next thing is in the recent budget 2026, direct taxes are estimated at 26.97 lakh crore rupee. Indirect taxes are 17.07 lakh rupee. It means direct tax contribution to the government is more than indirect tax contribution. The next thing is recession. Everyone feel that when prices are higher, prices are becoming higher means it's recession. No, it's wrong. Petrol is expensive, so recession. No, it's wrong. Okay. Recession means economy is shrinking. It's not like prices are being high. For example, in your town there are only few customers, only few jobs, lower business sales. Then shops will earn less. Factories will produce less because they earn less. People also spend less. Whole economy is slowing down. That is called as recession. Recession means negative growth. Recession means negative growth. Recession means negative growth, not slowdown in growth. Slowdown in growth is not equal to recession. Below 0%, that is negative growth, is recession. Okay. Means GDP is turning negative. Okay. For 2 consecutive quarters or more. For example, India is not currently in recession. It's in positive GDP. The overall GDP is positive because of domestic consumption, strong services, and also manufacturing sectors and public investment in the infrastructure. India has been in positive overall GDP. And you'll all will hear like bull market and bear market, right? Bull market means it's nothing but upward. Means prices of the stocks. If the stock market is in rising, it's known as bull. So bull will keep its horns thrust upward, means prices are rising. Bear, when it swipes down, so it's like prices are falling down. Bull means up, bear means down. That's all you need. Next, the most important, the 14th point was basis points. Sometimes you hear that RBI has reduced the repo rate by 25 basis points. What it means 1% means, as you know, these 1 kilometer 1000 meters, 1% means 100 basis points. So if repo rate at current, for example, is 6%, okay, if RBI reduces by 25 basis points, what does it mean? Means 1% means 100 basis points, 25 basis means 0.25%. Okay, means minus 0.25 percentage, which gives you 5.75 percentage. Okay, basis point means you have to convert like this into percent, and you could get the what is the actual percent. Basis points, this one helps you actually understand the repo rate news properly, so that's why I included these basis points also. So why do the basis points are used instead of just percentages? Means because in finance rate changes are often small, and the basis points let you talk about these small changes precisely without any confusion, so you could calculate and get it. RBI has cumulatively cut the repo rate across 2025 to 5.25 percentage by 125 bps, means 1.25 percentage, and in 2026 also the same 5.25 percent is being maintained. Okay, hope you all understood up to here. If you could have a quick summary, repo rate means RBI lending to banks, GDP value of all goods and services produced, Sensex are the indices that track the top stocks, current account deficit is this gap, disinvestment selling, direct and indirect tax, yes, directly paid, indirectly paid, bull versus bear, inflation means money losing its value, fiscal deficit is government borrowing requirement, NPA means bad loan after 90 days, Forex Reserves means a safety cushion, subsidies means the government taking a portion of your bill burden, recession, economy actually shrinking means negative growth, basis point small unit for rate changes. Yes, thank you. I'll wind up here. I have discussed around 14 terms. If you feel this video sensible of financial news, please give this video a thumbs up. It really helps to reach more people. Subscribe for more such videos, and I'll plan for 14 more terms next week. If you hear constantly but never quite understood, I will focus on those 14 points which you'll hear every day. And if you want me to explain any other term you have heard in the news, please drop in the comments. I'll try to cover up in the next video. Please do like, subscribe and comment. See you all in the next video. Take care. Thank you.